the three-statement model is a, kind of a traditional sort of backbone model of banking. When do you do a three-statement model? Well, we typically do it, when we are, either engaged with a client or perhaps in a competition to win business, and we need to kind of see some results of a potential transaction. The three-statement model is certainly, the thing that you would probably want to start with. You don't always need to have one, however. As we get into things like DCF and leverage finance, we can actually get by without a full three-statement model. But as the saying goes, if you can do this, you can do anything. So this is probably the more challenging, because there is the tying together of the three statements. So what makes this kind of pull together where we are, having covered income statement, working capital, cash flows. We did that little dip into advanced accounting, M&A accounting last week. But what makes this a little bit different is, let me share my screen, is that if you think about what's happened, how this is going to tie together what we've done. We didn't do a lot of the entry level accounting stuff, but if you think about, you've got like, let's say we'll call it year zero, right? You've got your balance sheet here, and your balance sheet basically, forecasts some level of assets, liabilities, and equity. And of course, we've got, the income statement here is providing, that kind of link, right? And then as we discussed, that cash flow statement, as we looked at it 2 weeks ago, was really merely a reconciling statement, which is to say, how did we get from, year zero kind of from the previous year, 0 minus 1, to year zero. And the cash flow statement just kind of sits there sort of as that reconciling document that helps us figure out, how cash changed. So that's something that that we've kind of covered. So now we're in a model, and what do we model? Do we model the past? Well, no, you don't model the past. The past is done. It's already there. It's in audited statements, or it's in the company provided statements. So we're not auditing. What we're trying to do is we're trying to get to a forecast. Now, the forecast is there to help us